Hi, Marius. Hey, Jay, Jonathan, Steve, Neelish, Jason, Shazan. Hello. Thank you, Al. Marlene, Michelle. So hello, everyone. I'll start in about 30 seconds. So I did put a link to the trading strategy in the chat box, the frequent chart patterns that I look at. And that link is in the chat box. Simon, Jasich, Tony, Arnie, Albert, Jean-Louis. Welcome, everybody. And thank you. All right, so why don't we get started? This is the second day of the 3-day live trade execution webinar series. My name again is Mark Shahzin, the pattern trader. If you weren't here yesterday, I talked about how I make all my trading decisions based only on price patterns, price trends, price action. To me, the market is ahead of the news. In 2 days, we've got an inflation report out of the Fed. It's going to be very important, but the market's already starting to move in anticipation of that. So markets are ahead of the news. By the time the news comes out, it's already been priced in, and you're usually behind the curve once the news comes out. Price is a discounting mechanism. So the analysis of price charts helps me enter a position and also identify where and how to manage my risk. So basically, I tell our members to look for trades where you have a 3-to-1 risk reward opportunity. So if you're looking at a trade in the FX, I don't trade the FX markets unless I can see a pathway to making 150 pips. I usually risk about 50 pips on the average trade. Now that sounds like a lot. Most of you are trading in and outs for 7 pips, 10 pips. But if you use a risk calculator and position your lot size correctly, you should only be taking 0.5% risk per trade. And that way you can lose a series of trades and it doesn't really matter. So I basically have a 5-step trading methodology to identify whether the market's in an uptrend, a downtrend, or just going sideways. And then there are 2 other very important market movements, which are markets that turn from down to up or up to down. And that's usually where I make a lot of my money. The market just goes, stick at a certain level, turn around and go the other way. And before they turn, there's always some kind of chart pattern. Double top, key reversal, an inverted head and shoulders, a double bottom. There's all kinds of patterns that indicate where price is either transitioning to or going to head. And then once I kind of dial down where I understand the trend, then I look for a specific day. If I'm looking on the daily chart, a specific weekly bar, if I'm looking on the weekly chart, and a monthly bar, if I'm looking on the monthly chart. And I'm looking for what we call key reversals or inside bars, where the market all of a sudden goes from one level and then closes on the opposite end of the bar within the cadence of the trend and the pattern. And then once I've kind of identified my setup, then I put a buy stop outside the high of something I want to buy or a sell stop outside some of the low. So today I'm looking at going long American Express. And in order to confirm what I'm looking at, I'm going to put a buy stop above today's high. And I'll show you exactly what I'm talking about on the chart. So today, basically, yesterday I was short the market, and today I went long the market. And I went the long in the form of call options. I bought these earlier in the day. These really don't reflect where I got in and where the market's trading right now. I'm up a nice little profit based on I got in early this morning where I thought the market was turning around. I look at how the energy enters the day. And what happened was the market opened lower and started going higher. And it's very important where the energy enters the day. I'll talk a little bit about that. It's a little bit nuanced, but I'll try and explain that. But I went long call options in the triple Qs, which is the NASDAQ. And then I also went long call options in the S&P. And I took partial profits on these. I took some nice profits out today, and I'm going long into tomorrow, these call options. Now, call option can expire worthless. You know, if it doesn't get above the strike price, it can expire worthless. So right now, this is, I bought the 271s right now. The Qs are trading at 272.87. So I'm about 187 pips in the money. And so this is what I did yesterday. I was short the Dow, closed out my positions for some nice profits. And then today I went long the S&P 500. So this is a very dynamic market. You have to be fluid and understand what's going on. And the markets are really reacting to price. So this is what I'm looking at in terms of the market. We talked a little bit about this yesterday. So this is the big picture charts, the weekly charts of the S&P 500 and the triple Qs, which is really the NASDAQ. And so I like to understand what's going on at a high level. I maintain that unless you can kind of understand the cards you're holding, very hard to understand what's going on in the market. If you're just watching it gyrate all day, it was up, down, in every way today. But to me, I'm looking at some very key thresholds in the S&P. So you can see, in the last couple, these are weekly bars. So you can see right in here, for 3 weeks, we kind of grabbed a foothold and stopped going down. And now, to me, it feels like the energy has got enough energy, enough gas in the tank to take the S&P back to 4,100. We're trading at about 3,900 right now. So we've still got, I think, a few percent on the upside. There is incredible negativity out there. And that, to me, is also a problem. There's so much negativity. There's so much expectation of a market going down that the market rarely accommodates everybody. And everybody is basically saying we're, going to go to 3,200 on the S&P, which it's very likely we will be, but not before it probably does some nice head fake. And who knows? This could turn into an entirely new market. So this is why we can't hold on to opinions or notions. We have to look at what the market does. So to me, the market has been trading within this triangle, if you will, this trading band, this channel. And so again, you can see how nicely it bounces off every time it hits here. So it feels like we want to retest this upper level again. And so I just watch how the market trades within these trading channels, within these chart patterns. This is the triple Qs. You can see that it's also been trading in a very nice trading channel. And again, would not be surprised to see this thing bang into the upside of this trading channel. Now, we have a report coming out on Thursday morning, and it's going to be very catalytic for the market. It's going to be an inflation report. The Federal Reserve is watching this very keenly. And depending on how it goes, it could be a catalyst for sending the market still higher. But again, I just watch how this market trades within this band. And this is what we're kind of likely going to see into the first half of this year. Now, we've got a lot of earnings coming out the back end of the month. So I think it's still possible that you have this initial energy that carries the market higher and then goes lower. But, all of that is noise. I just try and assess every day how to kind of determine where there's a trade or if there's a trade. So this is the S&P and the triple Qs on the daily. And you can see how we're just, we're at this very pivotal support level. Very dangerous to be short down here. Everybody's bearish. But, my whole thing is markets are energy. You have to kind of pull back on the elastic band, in order for markets to go again and build that energy. And who knows? We could be building a bottom here that could go a lot longer than people think. So this is why you got to entirely look at price and position your trades accordingly. You can see there's a nifty little downtrend line that comes in here. And it's very possible that we could have enough action that could carry us forward back to 285, 290 on the triple Qs. Similarly, we have this downtrend line in the S&P. We put on this bottom here. Now we've got this rounding bottom, and it looks like this thing could have enough gas in the tank to get us to 4,100. So while everybody's expecting recession and bad news, a lot of this has been priced in. And this is, again, why I kind of knew coming into this year why it would be very likely that this would be a very difficult market to handicap. Everybody has got certain expectations. There's been so much bad news that's already been priced in. And so, what's going to come out of, the blue air to now be the catalyst to push this thing lower? Who knows? Meantime, I think the momentum is to the upside. You can see that really the market stopped going down. It's like pushing on a string. When the market just pushes, can't go, it goes the other way very quickly. It's like a beach ball. You try and push a beach ball underwater, you push, you take your hand off. What happens? It just explodes. So there's so much expectation and negativity on the downside that to me, it's much easier to see this thing pop higher. So I always, look at the pattern, and then I look for a day where I can kind of understand how to set up a trade. So this is very small. You have a little minor key reversal, made a new high and made a new low, and then close on the high of the day. So you can set up your trade here and say, well, okay, this is my expectation. And so this is how I look to set up trades, where you buy it here and you put your stop loss there. And you have a very small risk for a very acceptable upside. So to me, it's always about risk and reward. And, like I said, I always look at how the energy enters the day. So we had a bit of a key reversal yesterday, made a new high, close on the low. Now, I don't trade all reversals in a vacuum. I look at what is the pattern, what is the trend, and basically, even if I thought this was a short trade, then I was saying to myself, okay, how easy is it going to be to bang through all of this price action? And the answer, not very easily. So to me, you get these reversals, but it felt like a trap. Like it sold off, closed on the low, looks really bad, but it's a trap. And so every morning I do something called the boiler room, where we start 45 minutes before the US market opens. And I talk about what I'm looking at, the trades that I'm looking at, what I'm looking to do. And this morning, I said that I'm looking to go long the Qs, because in the pre-market session all last night, in the cash markets all last night, the markets were going lower. So, the market closed yesterday, and then all last night, the markets started going lower. So again, this is kind of a nuanced discussion, but if I'm looking to go short, if I'm looking to sell a market, I actually want the market to open higher, open unchanged, or go higher before it goes down. So I wanted to build this energy. I want to have an elastic band. In fact, this is exactly what I did today in Chevron, in the boiler room. we saw 2 days like this in Chevron. There were 2 key reversals, and then Chevron just opened higher. And I immediately bought the put options. And for those of you who are in the boiler room, you know that you can kind of attest to that. I always like to kind of have some backup to what I'm saying here. I can actually go into my account and show you. So I bought these put options on a higher open in Chevron, and then all of a sudden Chevron started doing this. So I bought these options at $1.75 and I got out at $2.25. Actually, I missed a good portion of it, but if you can make 30% within 10 minutes. But the point is, I took advantage of the energy. The energy opened higher. Whereas in the stock market, the market closed here, and then all of a sudden the energy was just lower. So I don't like to chase trades. But what happened was the market, all in the cash market, all during the night was lower. And by the time the market was opening, it was right around unchanged. But it's where the energy came from. The energy was coming from a lower to a higher thing. And that always, to me, sets up the premise for a reversal the other way. And that's exactly what happened. You can see this thing opened lower and then went higher. It opened lower and then went higher. So again, it was also based on what I'm looking at in terms of my objectives, in terms of the chart, where I feel like this thing is going to somehow find its way back here. So, when I saw this energy, it just kind of corroborated and comported to what I was looking at. But nonetheless, so what I do is I just set up a risk reward hypothesis. So I started buying my call options right here at the beginning of the day, thinking to myself that I was going to risk till the low of whatever was showing in the cash market. So you can see that this thing opened lower. Once it went through the previous days unchanged, it just kept going higher. So this is what I look at. I look at how, so Duncan says, I can attest to that. I mean, I can go and find those trades. And, I like to do that because there's so much BS in this business that I'm going to have to log back in and whatever. So, but let me go and find that Chevron trade and show you what I was looking at. So again, everything is about price and how price behaves in certain areas, and then where the energy comes from. So, and then I talk about this in the boiler room. So if you are interested in working with me, that's the best thing to do. Sign up, be a part of the boiler room. And that's probably the best thing of what I do. We have an elite program. We have all kinds of programs. I'll give you a way to contact me. So you can see here are my Chevron trades. I bought some at 175. I sold some at 208, and then I sold some at 235. And actually, I left a lot on the table. Probably went to almost $3. But I made, this much money within 15 minutes of the opening. And again, probably wasn't the greatest trade on earth, and that's why I took my profits very quickly. So this is what it looked like going into today. So this was Chevron, and I was looking at these patterns here, which look like they were resistance price patterns. There's a lot of resistance in this area. And then you had 2 reversals. You made a new high 2 days ago and closed on the low. And then yesterday, you made a new high and you closed on the low. So what happened was Chevron just opened higher into this higher. It opened whatever, like 176.80 or something like that. And so I started buying my puts right there and then Chevron went there. So I just took advantage of this through put options and made about 30%, 40% of my money in about a half hour, just looking at that price action. Now, Chevron's a very mixed picture. You can see it ended up opening higher, going lower, and then closing higher. So that's why I said it wasn't the greatest trade since sliced bread. I just took advantage of an arbitrage. So sometimes when something closes on the low and it opens, so you can see that this little hash mark right here is where it opened. So you can see right to the left, that's where it opened. So based on the way it closed, I surmised that it had to go through the previous days unchanged. It had to kind of go through here, even if it was going to go the other way. So this was a real gamble, but this is an example of an arbitrage where I use the energy coming into the day. So if the energy starts higher into something that has resistance, I'll sell into it. If the market opens lower into something I want to buy, I'll buy into that and I'll use that energy. So let's see. Tony says, yes, I took the trade on Chevron. So it was a very quick scoop out. Not the greatest trade since sliced bread. So the trade I'm looking at going into tomorrow is American Express. I actually bought a little bit on the close. So sometimes I'll either wait for the opening, or if I think that there's going to be some follow through, I'll just buy some on the close. But it's all, again, based on price. Now, American Express, when we look at this, it's in a downtrend. But trends do change, and when they change, they're preceded by a pattern. So you can see that this has just been a kind of a drifting affair. It's been kind of going sideways. But within this drift, there are some very discernible support areas. You have the double bottom there. You have a huge double bottom here. And then you have this upside down or inverted head and shoulders. Looks like a man or woman's shoulders just upside down. So it's called an inverted head and shoulders price pattern. Now, this is a bullish price pattern. This precedes a market that goes higher. So you can see now we've been kind of testing above and below this neckline, and we put a rounding bottom here. And based on this collective kind of all of this support in here, as well as today's key reversal. And again, so what I do is I look for a pattern, and then I wait for a day where the market indicates how I can set up my trade. So very simply, what I would do is put a buy stop above the high here. So the high was, I don't know, 152.20 today. So you could put your buy stop at 152.30 and put your stop loss at the low of the day, which is, I don't know, 149.5. So you have a $3 risk for, I think this thing looks like it wants to go back to, 160. So you can get a 2.5, 3-to-1 risk reward at least. To me, it feels like we're going to retest the upside of this resistance, and who knows, maybe just keep going. So again, I just try and find pockets where the market's in this very deep coil. It's been coiling, it's storing energy, it's building energy, and it looks like it's going to uncork that energy to the upside by virtue of the preceding patterns. And again, you just probe the market. We don't know if we're right or wrong. You buy it here, put your stop there, risk 0.5% on this trade or 1%. And this is what I look to do all the time. Once something gets going, you see the trend, and, now it's somewhat mature. It's down here. You want to get short down here, but then you're exposed. What I like to do is get something, when the horse is about to come out of the barn. I actually shorted the Qs right here and made 7 figures on this move in the Qs based on seeing this rounding top. So on the Qs, I saw this thing collecting. I got short there after 8 days of it not being able to go higher. So what I like to do is just watch something coil and then get it right before it's about to unload. Now this thing looks like it's coiling this way and about to unload that way. Greg says, would you buy the stock or a call option? If a call, what is the entry point? So, you know, I do buy calls all the time when I'm, you know, looking at bullish bets. And it really depends what the liquidity is, what my expectation is, and how much I have to pay. So I typically, if it's trading at 152, might say, look at the 153 calls for the end of the week. The further out you go, the more you pay. So the 153 calls are trading. Now, in this case, you just have the 152.5. They stagger every $2.50. So the 152.5s, which are slightly on the money, are $2. Somewhat expensive. Somewhat expensive. So when I get into a call, my whole risk profile going into a call, because you have to be prepared to lose all of this. If you pay $2, now this is based on 100 shares. So you have to multiply 2 times 100. So this is $225 a call. But what this says is that if you're paying $225, you have to add it to the strike. So effectively, your break even is $155. So this thing has got to go up $3 by the end of the week just for you to break even. So my whole thing is that if I'm going to pay $225 for a call, I want to make at least 3 times my money. So I don't really buy an option unless I can see a pathway to making 3 times my money. Now, 3 times this would be what, around $7? So you'd have to add 7 to 152.5. So this would have to go to 159.5 by the end of this week. And so sometimes I try and visualize, can this happen? Is this realistic? What have you? And sometimes you can just get into these things. And if you get an immediate push, this 225 can go to 350. You can make 30% on your money and jump out. So I think that there is a push here that's going to come out of this. So what I would do tomorrow is if this thing opens lower, like Chevron did today, open higher, I would buy this into a lower opening, and then you're closer to the low. So your risk is very, very small. So if this thing opens lower, I would buy it. And conversely, even if it opens higher, I don't like to buy gaps. I don't like to buy huge gaps. If this thing opened $2 higher, I don't typically like to chase things. So again, it's all about waiting for the market to come to you, waiting for the market to give you what you're looking to see. So when Chevron opened higher, I could see I had very little risk. I took a shot and made some money. So this is an area where there's an opportunity to make money. Either, you know, it opens lower, you can buy the stock, or you could buy the option. The options are a little expensive, but to my mind, I think you're going to get a push out of here pretty quickly. So it all depends on what your expectations are, where the trade is. And this is what I like, something that's just about to come out of the gate. When something goes from one direction to the other, that's when you get a maximized energy. So, you know, I expect some kind of unleashing, uncorking of the energy here. Thank you, Simon. So, you know, this is what I look at. I look at price action, whether it's on the euro, yen, gold, the stock market, stock indexes. I'm just looking for areas where I can understand where the risk and reward is, understand what the, the big picture is, and, just play within the parameters. So this could go like that, or, then I look to see how it plays around certain inflection points. So if we get to this 160, now I'm going to be watching, does this thing roll, or, do we start breaking out here and setting up for a trade to go north? I mean, with all this bearish talk, this still looks very bullish, but you still got lower highs, right? So in order for a market to confirm itself, this thing needs to start making higher highs. If this is a series of bottoms, then the market should start confirming it. If we, go up, we could still go up and stall out and do this. And that's likely what is going to happen to these markets. I think the back end of January, you're going to start seeing this market come down. But I think there's just enough energy, enough gas in the tank still to take this. And it's a game of slalom. It's like, you're one of those tanker captains playing, slalom with the icebergs. One hand, the market looks like it can go up. On the other hand, the big picture is the secular trend is lower. So that is the problem. You see these areas where you see these pockets where the market can do some short covering. And, to my mind, you play them pretty quickly because the big patterns are still lower. So again, you're always holding these two concepts. Is that true for the small caps? So actually, ironically, the small caps did much better today than technology did. So this is a market of stocks, not a stock market. There's a lot of trade-offs between growth and value, and a lot of sector rotation. It's a very complicated market. So you can see on the bottom chart, I have technology, and on the top chart, I have small caps. And you can see today, there was hardly any movement in technology. So Apple was actually even down today, while the rest of the market was up. So you could see that there was almost no movement in technology, or that this is the bottom chart is a technology ETF. This is the IGV. It's filled with Microsoft and Intuit and Salesforce and a bunch of stocks. And this is the IWM, which is the Russell small cap. And you can see that, technology's hardly moved, whereas small caps have already started getting a lift. And you can see today we had what I call an outside key reversal, where both the high and low took out the high and low of the previous day. So this is a pretty bullish bar where you made a key reversal. And so that is pointing in the direction it wants to go. So to me, I still think there is further momentum left on the upside, and possibly a lot more. I mean, we could be looking at a bottom here with all this talk of recession and fear and whatever. We could be looking at double bottom, rounding bottom, and who knows? This thing could have much more potential than we think. I'm looking at this within the confines of this downtrend. So this is where, the rubber will meet the road at about 185. So if we get there, that's what, will be a proverbial inflection point. Will we take off, or will it start rolling? So this is what I do. I basically draw my structures, understand where the market is. One hand, you've got short-term bullish momentum. On the other hand, you've got long-term bearish momentum. And it's constantly weighing, these two parameters. Now, the IGV has also got this very subtle bottom in here. And then you've got this kind of reverse triangle, which in and of itself is just a pattern. And once I just identify the pattern, then I see how the market behaves within that pattern. Does it bang the upside here and come back to the low side? Does it start breaking out? And then I start making all kinds of decisions based on how the market responds. Actually, you can see, look how neatly, even going lower, how the market pivots off certain technical areas. So people who say they don't believe in technicals or price simply don't see the evidence of it. I mean, it's just amazing. This has been going sideways, but within doing so, it's been bouncing very neatly off this line. So now you actually have a larger potential triangle, and maybe this market makes it all the way back here, which would be consistent with this long-term trend line. Basically take it right to the top of the channel. And we have this little bottom here, and who knows, stranger things have happened. So this is the thing, when I see a little inside bar here, I can set up a risk reward trade and say, okay, I'm going to buy the high, I'm going to put my stop loss on a low, and now you have a very small risk to see if this thing is going to keep, going higher. Dexter says, do I pay any attention to fundamentals? There's a big report on Thursday. Yes, there is a big report, but you can see the market is already starting to move. The market is anticipatory. The market is ahead of that report. So whatever happens on that report, the market's already started bottoming. So, I can imagine that is going to be fairly bullish for the market. Although here's the thing, we're in a bear market, and this thing could bang in here and go down at any time. But actually, before it does, it will put on a pattern that we'll understand that it's about to roll again. So the markets put on a pattern before they put on a move. Before that went down, this put on a triple top pattern. So they just don't come out of nowhere. Now we put on a rounding bottom. We put on a double bottom before we took this way. We had a double top before we went that way. So the markets always put on a pattern before they take off in one direction or another. So to me, the markets are ahead of the news. So by the time the news comes out, I don't know how I'm going to be positioned. I'll have to see how the market closes tomorrow. If we're up here tomorrow and it's already pretty much exhausted itself, then, going long into that report may not be the best idea. So again, the markets just pivot and rotate around certain technical levels. So the markets will move ahead of the information. CZ says, do I use moving average? I only use exactly what you see on this chart here. Price and time, a clean chart, a naked chart. There is no volume. There are no moving averages. There's no MACD. There's no Bollinger Bands. There's no what we call leading indicators. Indicators are called lagging indicators for a reason. They're based on previous history, and the market's about the future. So to me, using indicators is like driving, looking in the rearview mirror. I look at a combination of trends and patterns and price action. So on the top chart, we have the IWM. It doesn't matter what it is. I can open that chart and say, okay, what is going on here? So I can say this is in a downtrend. So I largely want to get in sync with the trend, although there are areas now where this thing is finding support. But for instance, right up here, we were in a downtrend, then the market puts on a triple top, and then it confirms itself in the form of this price action. Made a new high, close on the low. So now you have a downtrend, you have a triple top, you have your key reversal, and now you get short. And you could have taken a nice trade from 180 to 170 just based off that signal. And that's what I look for all the time. I look for some signal to take a piece out of the market. Some pieces are bigger than others. And you can see the markets now are kind of just locked in this micro moves. Whereas, I typically like to take a chunk out of the market, take a piece out of the middle, whether it's on the upside or the downside. You see the double top here, and then you take a piece of the middle. It stalls out here. I took a huge chunk out of this. I bought puts here on the QQQs at $1.50, and they went to 14 in 3 days. So that's what I'm looking for. But you can see that you need the cooperation of the markets. The markets have been in a pretty much of a very tight trading range. So it's been, somewhat difficult navigating these waters. And this is why I've been saying to our members that, you really can't be long for more than 2 days, and you can't be short for more than 2 days, because this thing is changing directions, every other day. So basically, again, I just dial it down to a look. Here's a pattern. Here's a coil. This thing has been building energy, and now it's breaking out to the upside. So this energy is unleashing to the upside. So I think of the market in terms of energy flow. The markets build energy, and then they release energy. And then they build energy, and then they release energy. And it's just this catch and release on a constant basis. Now, ideally, I'm always looking for things that I can establish a position where I can take a ride for 3 weeks or 3 months. But you can see this is not really that environment right now. I can only, you can only do as well as the market environment. But eventually the market will break one way or another, and that's where I really make all of my money. This is just in and out trading pretty quickly, because that's what the market environment is right now. Yashvin says that the number of coil bars indicate the power of the next move. I don't think there's, a magic formula. There was a pocket in here where it was about 8 days. I remember this very well, because this is where I shorted the Qs. This was like pushing on a string where it just couldn't go any higher. And this is like pushing on a string here. It can't go any lower. So there's no magic thing. I think this was about 8 days. This looks like a lot more. I can't even see in here. So there's no magic to it. I can just visually see that the market starts stalling or collecting at an area. So here, I think it was about 8 days where it just couldn't make a new high for 8 days. And then here just can't make a new lows. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 14 days, 2 weeks, or more than 2 weeks of going just nowhere, but building this energy coil. Here's your bottom. This is what gave you that. Now you have this cork, and this is what could give you this. So I always look at the energy and then see if the energy stalls out. So you can see that this is the IGV, this is the technology, and we could just crap out here. Or we could go to the top and crap out there. Or we could start going higher. So basically, I just look and see how the markets play within these patterns. So on one hand, you do have this kind of bottom in here. Hard to be short when you've got this kind of lurking in the water. But now the market needs to, kind of confirm that this is a bottom and make new highs. And if it doesn't, it's going to stall out. and roll over. And either way, I'm going to catch whatever this thing does. Because once I kind of understand what's going on, then now I'm just waiting for the market. The market's like a referee. When we are ambivalent or unsure, just let the market give you more information. Let it do more work. Let it show you, what it wants to do. It starts drifting down here. It's likely going to, go this way. It starts taking out this high and consolidating. Then you looking at something like that. So again, this is what, I do at the Pattern Trader. If you're interested, just send this email. I'll put this in the chat box. If you're interested in working with me, where's my chat box here? There we go. Just send an email to this address. So let me share with you my book. This is just a very nifty way to understand, perhaps in better detail than I've been able to articulate, my 4-step trading methodology. Here's the handbook. I'll put the link here, Dwight, if you want to put it in YouTube. And it's a pay what you want. So basically, you decide what you want to pay for it, $5, $20, $100. And whatever you pay, I will match that and send that to the American Childhood Cancer Organization. So I donated, I think, over $34,000 last year. All of my book royalties went to the ACCO. So basically, you come here, click the thing, and this is how to access this book that will tell you how to identify the patterns, then wait for a key reversal on inside day bar, and then how to put your pending order to catch that trade. So Devendra, I will honor your request to take a look at things, but I'm not gonna, the idea for me is just to show you an approach, how I use price analysis as a weapon to make a lot of money in the markets. And it doesn't matter what you analyze here. So Devendra asked about Meta, which is Facebook. Meta is kind of a funky chart. It's got an unconventional kind of pattern. So, to me, it's all about discipline. Whenever you start kind of departing from something that did I remove this thing? No. So I typically like to have a market that creates a base, some stability that I could understand. So this has kind of got a, I guess it is a pattern in the term of a cup and handle. And we've taken out the neckline now, and you've got this key reversal. Made a new low today, close on the high, and now is pointing in the direction that it looks like it wants to go. So it does have this basing pattern. I typically like to see, a low consolidated. Makes me a little bit fearful, so I like to see something like that, where you kind of had something that's consolidated. So again, these are things that look good now. They suck you in, and then by the end of January, the macro trend comes in. It comes back down here, and then that's a better price to catch it. So whenever you're kind of chasing something that you're not quite comfortable with, I've learned it's not a good idea, but this thing, could keep going. It's starting to break this long-term downtrend line, and I think this will be a great stock for 2023, either now or later. I do think you've put in the low. So you can see now we're kissing this inflection point. this downtrend line. And this is where, the markets start confirming. Usually you get a breakout and some kind of retest. And then if it, makes a new high again, then you've got something good. But this thing feels like, it wants to go to 145 no matter what. So it's right at this pivotal point, and the minute it starts thing, a lot of people are going to start getting in this thing because it's, starting to break out, starting to make higher highs and higher lows. So I always like to look at things on pretty long-term time frames. And again, I just love this game because it is just amazing to me how prices can go here, and how in the world could you anticipate that it was coming here? But if you look at how the markets conjoined, look at that. And to me, I will never get over how amazing these markets are, that they retreat to certain points. And so now this is a big kind of reverse symmetrical triangle. I don't even know what you say to something like this, but it hit this pivot point, and this could be it. But that is the amazing thing about price. Price has a way of retreating to certain points, whether it's a pandemic, some outlier. The NASDAQ did the same thing. NASDAQ went, pandemic hit, came to the bottom of an ascending triangle, then made a new high. So it's just amazing how they retreat to these exact spots. So if you understand how charts work, you can really put them in your favor. Simon says, your strategy and methodology is great for an end of the day trader. Analyze the New York close, then place your step. Yes. So to me, trading is really about discipline. And the more you trade, the more likely you're going to lose. It's like, being at the casino. So, what I try and do is I either trade right at the beginning of the day, like I see something like Chevron open higher. I hit it as it opened, it dropped. I took my money, I was gone. And, and then I bought the indexes when it was crossing the unchanged. And then I don't do anything. And then I wait till the end of the day, and like American Express, you can either buy something, on the principle that, you think that maybe it'll open stronger tomorrow, or you can wait. So I took a little nibble on the close, and then if it opens lower, I'll buy some more, and I'll just put my stop loss under the low, and then that's it. That's it. So if you're trading on a 15-minute bar in and out 20 times a day, this is where you start losing the objectivity. What I like to see is the big picture, so I can take advantage of the bigger moves when they occur. It's been very frustrating the last couple of months because you can see the markets don't go anywhere. Toby says, what does an inside bar mean? So an inside bar is basically where one bar sits within the range of another. So, right here, this was a downtrending market, right? So now you had this short covering rally, and you're always wondering where it's going to, end and then turn. But you don't have to wonder. The market will tell you. So basically, you had this rounding top, and then right here, this is exactly where I got short, right here. So you can see that this particular day was an inside day bar. That day sat within the range of the previous day. So you can see the high and low of that day was within the high and low of the previous day. So I call that an inside day bar. So the way I look at that, this is a coil. It's a storing of energy. And then I look for the energy to release in the direction of the pattern and the trend. And this is exactly what I did. This was the same setup in the Qs, and this took 8 days. And when I saw it stalling out, I got short right there. I started buying puts at $1.50, and 3 days later, those puts were at $14. And that was an inside day bar coil. Here's another inside day bar. You can see here, the high and low of that day sits, let me use a different color, within the high and low of the previous day. So it's just a coil. It's a storing of energy. But here was the real deal. This was a double top within a downtrend. This was just a coil, a storing of energy. And all you had to do was put your sell stop right underneath this inside day bar. And now you are into a breakout where it uncoiled and all the energy uncorked to that side. Now I'm surmising you've got a buildup of energy here that looks like it wants to uncork that way. How high, how far, how long, who knows? I'm just looking to take a ride on the energy. Simon says, all this makes perfect sense. As you say, this is all scientifically proven, stacks the odds in our favor and gives us an edge, which is all we need. So I think I'm going to end it there. This is, I think a good example of, how you can make hay when there's not a lot going on, or if there's a lot going on. It doesn't really matter. These setups, they're building, and who knows? This may be just an amazing move in American Express. We could be looking at a major low. So it still looks, difficult in here. This still looks like a double top. This huge pattern still looks very bearish, but you could still get a pullback to this long-term downtrend line. So all I'm looking at is a push. I'm looking at an area where I can get in, where the risk reward is in my favor, and take a ride on the energy. And who knows, we could get there and then go there. This could be the governing pattern. So again, you get in and then see how it feels. In this environment, if I start getting money, you get a $5 push, take 20% of your position off. You get another $2, take another 20%, and then put a trailing stop on the rest. Dexter, I buy, depending on when I'm buying options, sometimes I'll buy options a day or two before it expires, and that way I'll buy very close to the strike price, maybe even in the money. It really depends. Depends what I'm looking at on the trade. It depends on a lot of things, but sometimes I'll buy the Qs on Mondays, five points out of the money. So if, we're trading at 270, I might buy the 275 call options. So it really depends, but buying options, the decision to buy options is really a decision based on what your view of the underlying instrument is, and options, you need something to work and work right now. And if it doesn't, you're going to lose most of your money very quickly. So you need to see that there's an opportunity for an explosive move. Like, American Express, I think it's coiling and it's going to move. All right, guys, thanks very much. I will see you back tomorrow at 4:30 Eastern Standard Time. Thanks, Dwight.
All right, see you tomorrow.